If you constantly get stopped out, even when your setup looks perfect, your daily bias may be the real problem. Welcome to FXPilot, where smart traders learn to trade with precision, discipline, and market structure. If you are new to this channel, kindly subscribe and hit notification for more videos, and do well to share to others to benefit from this channel. In today's video, I will show you the right way to frame daily bias using ICT Closing Price Logic and Malaysian SNR, so you can stop forcing trades and start trading with the right direction. Most traders decide bias emotionally and end up being confused. I was once like that, but then I realized the closing price tells a much bigger story than most traders think. Before we go into backtesting our daily bias using the bar replay, we need to understand some of the parameters that makes up this concept. First, we need to understand what is daily bias. Daily bias gives direction to your trading setups, and it makes you more organized and focused. Once you have a direction, you become organized and focused. You know where price is going and you know where price is coming from. So daily bias settles that confusion. The next thing is why closing price matters. Closing price matters because it will end the confusion of knowing which way price will go. You start guessing, will price go up or it will go down? It also gives you clarity on where price is going. So the closing price logic will help us not to make wrong decision. It will help us to be in the right direction. Now, let's go through what we have here. We will be using two types of setups. This is called the CROS, the candle reversal setup. So this candle reversal setup is based on previous day high and previous day low. If price sweeps previous day high and close below the previous day high, it signifies reversal. So our directional bias will be what? Bearish. Whereby price closes below the previous day low or closes above the previous day low, it shows a sign of continuation and not reversal. That is where we now have a lower low, lower close. Okay, so this is called the candle continuation setup. So these two setups will decide our directional bias. Now, the daily bias simplified using the following precepts. Number one, the closing price logic. What it means is that in as much as we have, if we have something like this, let's say we have a CROS, we will not just conclude that, okay, our draw on liquidity will be this. Yes, we know our draw on liquidity will be that. So we know that price will definitely come down because it's a reversal. But however, we need to mark the closing price. It is the closing price that will tell us whether price will go up or it will go down. So after marking this closing price, we want to see if actually price wants to come down here. We want to see price rally up above the closing price, form a change in state of delivery on a lower time frame, or goes up, takes Asian high or London high during New York and comes down and hits this. All of that will be done in the next video, where I will do example of how to trade the daily from the daily bias time frame, that's the daily time frame, down to the entry. So I will discuss all of that. So the closing price logic, even like here, when you see price closed like this, it shows continuation. It shows that price will go down to this. This will be our draw on liquidity. But however, we will not just assume that price, when I watch most of the videos on YouTube, they'll just say, okay, price will go down, not looking at whether this man is at a strong zone or a key level to bounce back. We will see situation like this. So in order to save ourselves from guessing, we mark the closing price and wait for price to rally up. If price rally up on the 15 minutes time frame, you already know, okay, this price is rallying up. It need to do work. What is the work? It need to sweep Asian high or London high into a key level, because the dynamics of change in state of delivery states that when price breaks a low, I will give that video, I will do a video on that. When price closes below a low, it leaves a continuation fair value gap. So this man that rallies will go into a fair value gap after taking liquidity from either Asia or London before coming down. So it is the closing price that will make us understand we cannot trade without the closing price. Okay, then we also have what we call the previous day high and previous day low. So from here, price sweeps the previous day high and closes below. It shows reversal. Price run below the previous day low and closes below it. It shows continuation. So two types of direction, reversal and continuation. So we are going to apply the previous day high, previous day low logic. Candle continuation setup, which is this for our continuation direction. Candle reversal setup, which is this for our reversal direction. Higher high, higher close principle. Higher high, higher close means when you have a bullish candle, two bullish candle, okay, when you have two bullish candle and then the wick of this man is like this, and the wick of this man is like this. Now the principle of higher high, higher close means this high is higher than this high and this close is higher than this close. So therefore it is a continuation setup. When you have a higher high, higher close principle, it shows that price is going up. Even sometimes you will have something like this. You have something like this. Guys, please pay attention to this. I'm going to reveal secrets. As long as this high is higher than this high and this close is higher than this close, okay, the next candle will give you a bullish move. So the directional bias will be bullish. All right. Guys, I hope you're following. Just pay attention. Just follow me. I will break down everything. Then we have what we call the lower low, lower close principle. So that is for still a continuation, candle continuation setup. When the price, that's for bearish, the other one was for bullish. When the low of a bearish candle is lower than the low of the previous candle and the close is lower than the close of the previous candle, it means that price will continue to the downside. So that is what this means, and it is the principle behind candle continuation setup. Candle continuation setup, both bullish and bearish. We will also be using ICT plus Malaysian SNR key levels. Okay, now when you are doing, see, ICT is not enough. ICT is not enough for trading. Let me just tell you. ICT is not enough. You need Malaysian SNR. You will see it during the backtesting, during the bar replay backtesting. You will see it. Malaysian SNR key levels also play a significant role in how you judge your bias. Then we'll also look at market maker buy and sell model. The market maker buy and sell model will caution you on if you were thinking of looking for a bullish bias, you must have a sell side of the curve for a buy side of the curve to complement, or you have a buy side of the curve for a sell side of the curve to complement. That's how market does. Because when market moves up, it leaves fair value gaps. So the sellers, which is the sell side of the curve, need to go down to complete up, to fill up that fair value gap before continuing down. So in every bullish move, there must be a bearish move to complement. In every bearish move, there must be a bullish move to complement. That is how the market moves. It seeks liquidity and offer fair value. That's how the market moves. So kindly keep this at the back of your mind. We are going to use them. Okay, we'll be using them while we go into, we'll look at the bar replay example. We'll be using Euro USD. Use a bar replay, backtest the daily bias. Now let's look at a typical example, Euro USD daily chart. Let's use it to do our backtesting to know our daily bias. So we'll use a bar replay. Can start from anywhere, okay? Let's just start anywhere. Okay. Now pay clean attention. Remember all the precepts that we've highlighted before. If you look at this candle, we are looking at daily bias now. This market closed strongly above this after sweeping the low of previous day. So it closed above previous day. So by all records or reasoning, our bias is bullish to the upside, and this will be our draw on liquidity. Now guys, pay attention and follow me gradually. This is where many traders make mistake. They assume or they guess it will go up because everything about concerning previous day high, previous day low is telling us that our directional bias is bullish. And moreover, we have a significant high. Okay, we have a significant high. We also have the Malaysian SNR. Remember all the principles we are going to use. We have Malaysian SNR. We also have a fair value gap here. So everything is pointing at price going up. Okay. Now remember, there is a market maker sell side of the curve, confirming that there must be a complementary buy side. Okay. So you can see how everything is linking. This is how you do your daily bias. We'll be using two candles. We'll be pairing two candles. So now we are here. We will not assume that price will go up. We will follow our closing price logic. So you mark your closing price and wait for the new candle. If price will go up, it will come down. It will open low, okay, and then high before closing. Okay, that's how price will go. But if price opens above our closing price, then we are going down. Okay, we are going down. Now let me tell you something. In the next video, I will explain the dynamic principle behind change in state of delivery and a reactive continuation fair value gap. Now, when price sweeps a low and closes above a previous high, it leaves a fair value gap a continuation fair value gap in reaction to an intention that buyers are going up. Whenever price breaks a high or it disrespects an opposing fair value gap, it must leave a reactive continuation fair value gap. Take note. So if this man will go down, it will go up above our closing price before heading towards that continuation fair value gap in order to move up. Okay. Now that movement up on the lower time frame, 15 minutes, because this is a new day, price must go up and take the Asian high or London high into a key level, maybe a fair value gap, before coming down. Do you understand? Please follow me, guys. Follow me. I'm going to reveal secret to you. So I will not tell you price is going up or price is going down. I will go to the 15 minutes after marking my closing price for the day. I will go to the 15 minutes and watch where price move to. Is it above my closing price or below my closing price? So let's see the next move. What did I tell you? Price went above our closing price. This price that you see here, this short wick, okay, that you see here, happens on the next day. And this move may be price taking Asian high or Asian and London high, and then during New York came down and closed here. Okay. But however, we will not conclude, because all we need to do is to mark our opening, our previous day high, okay, and previous day low. We want to determine our bias. There is nothing yet, okay, we will remain neutral. But what will make us know that price, our bias is down or will be going down or up, is our closing price. Mark your closing price. After marking your previous day high and previous day low, mark your closing price. Now, if this market will continue to the downside, you must see, we'll go to the 15 minutes. I'm not going there now, but I'm telling you what you will do during trading. I will do that. Will come in our next video for the examples, because this backtesting will take enough time, because I need to do clean explanations. Now, there is something I want you to know. This price went up and came down. Where did it come down to? Malaysian SNR. This strong zone. So there's a rejection here. Now, please guys, this Malaysia SNI gap, this open and close gap, would have been, but it was fresh until this man used it. It has been used, so we cannot use this. So this is the only one. So if I am taking my sell after price takes liquidity, section liquidity, either London or Asia, I will target this Malaysian SNR as my target for the next day, because I've already known that my bias will be down, because price rally up first. Then I will not target this on the daily. Okay. Now we have marked our previous day high and our previous day low, and then our closing price. If this market will continue to the downside, we must see price on the 15 minutes time frame rally up, takes Asia or London high, and then cause a change in state of delivery. Now I will tell you what is happening in the weeks. In the weeks, when market moves up, it forms a fair value gap, and when sellers come down, they will close that fair value gap or disrespect that fair value gap and give a reactive fair value gap. That's the principle of change in state of delivery, the dynamic principle of change in state of delivery. I will do a video on that. Then it will now, you will now take your trade using change in state and target the low or this low. So let's see whether price will rally up above our closing price or below. So let's see where price goes. Now you see, price went up. Guys, take note. On the 15 minutes. Now, what I'm trying to tell you is that if you watch most of the videos on YouTube, they will not tell you this. They only tell you that, okay, we don't have any bias here because the previous day or high was not taken. But guys, I'm telling you that we have a bias. And to know your bias, you mark the closing price and go to the 15 minutes time frame. Now, if you look at this, it is telling you that the next day price went and took either Asian high and London high, and then took previous day high, then cause a change in state of delivery, because in this week, after price breaks a high, it leaves a fair value gap. That is the dynamic principle of change in state of delivery. When price breaks a high, it leaves a fair value gap. Then that's for buyers, the buyers that went up to take this high. Then the sellers that comes down will disrespect that fair value gap by buyers, which now gives us an inversion fair value gap. That will leave a reactive fair value gap for continuation, a continuation fair value gap to the downside. That is where you take your trades. Okay, so you now see clearly that your bias will be down for the day. Now market moved down and then went to this low. It takes previous day high, then you move toward the previous day low. Now let's see. If you look at what we have here, you see that the low was taken. So now what is market telling you? Based on our precept from the beginning, market is giving us a lower low, lower close. When the low of the current candle is lower than the low of the previous candle, and the close of the current candle is lower than the close of the previous candle, is a sign of continuation to the downside. So therefore, our bias is to the downside. So we'll mark the low of previous day, and then we'll mark the close, very important, of previous day. Okay, so now our bias is to the downside because we have seen a lower low, lower close principle. Okay, although price did not close, remember I said this, that sometimes you see price not closing below the wick, but it is forming a lower low, lower close. It will give you, is a sign that price will continue to the downside. So let's see, we will not conclude yet. It is our closing price that will tell us where the direction is going. Closing price theory is very important, guys. Take note. So we'll go to the 15 minutes and check. We are not going there now, okay? But this is what you will do. After marking your closing price, marking the low is now our draw. Okay, it's now our draw for now. Price will rally up. Now, this domination here, there is a reactive fair value gap here, a continuation fair value gap, because price has dominated sellers here and buyers here. There was a fair value gap inside of here. That price, a continuation fair value gap, that price dominated. So it will leave a reactive fair value gap, which is a continuation fair value gap to the downside. So this man that opens newly, if it wants to sell, it will go above our closing price into that reactive fair value gap created by sellers before we now take our trade to the downside. So now let's see if our bias will be correct. Now you see, our bias was correct. Price went and rallied above the closing price into, now if you look at this, guys, Malaysian SNR is very important. Very, very important. Look at this. What did you see here? Price hit that zone. The zone was used here, but because this man closed below it, it became fresh and then tap into it. Okay, so this is our key level. So when price, and probably there must be, or there will be, a fair value gap associated with this key level. Price rally on the 15 minutes time frame. You see price takes liquidity above Asian high or London high, and then drops down, displacing with a strong push, causing a change in state of delivery downwards. Okay, that is how you know your directional bias. You don't need to guess that because candle closed below candle, it must go down. No, your closing price logic is very important. Now watch, price closed below this, okay, giving us a continuation. So we have a lower low, lower close. That is what? A continuation. So therefore bias is down, right? So we mark our closing, our low, that's our draw on liquidity. We mark our closing price. Okay, so This closing price is what is the point that will make us be sure that our market will either sell or buy. So even after all of this, market may do whatever it likes, but it is the closing price that will reveal this hint. It's a trick. Closing price will reveal it to you. So our bias is that price will go up. Price will go down, but it will go above closing price, then comes down and takes this draw, probably this low. Okay. Now, but we will not guess. We'll go to the 15 minutes after marking this. I'm telling you in reality, you go to the 15 minutes and then the closing price will expose it to you. Remember, there's a reactive fair value gap. I will do a video on the dynamic principle of change in state of delivery. Okay, don't miss that video. Now let's see our direction. Exactly. You can see it's very predictive. You can see it clearly. Above our closing price, price moved up into that fair value gap. And then caused a change in state of delivery. After taking liquidity above either Asia or London the next day, in the New York, you now trade this and target your draw on liquidity. Okay. Now what happened again? Price gave us another lower low, lower close. That is continuation. Now also close below this. So our bias is to the downside. Okay. So we'll mark the low. That's our draw. And then mark the closing price of that day. Once the daily candle close for that day, you mark it. Okay. Mark it. Now remember, we have this as our draw. Apart from this draw, we also have this Malaysian SNR. Go and watch my Malaysian SNR if you have not watched it. It will help you. We have this Malaysian SNR. We have this. So every indication is pointing that market will go down. But however, we don't conclude. We need to work with our closing price on the lower time frame, 15 minutes. Remember, the dynamic principle of change in state of delivery states that when price closes below the previous day low, it will leave a reactive continuation fair value gap for the intention of going down. So that is where this man will open and rally to, cause a change in state of delivery after taking liquidity. Then it goes down. Let's watch where our next bias will go. Exactly. Now you see it's very clean, guys. Very, very clean. Now, if you went to the 15 minutes time frame to watch your closing price, you'll find that the price rallied up. Into that fair value gap that I'm telling you. Into that fair value gap. Remember, when price breaks a high, it leaves a fair value gap. When price disrespects an opposing fair value gap, it leaves another fair value gap. That is the dynamic principle of change in state. And when price disrespects an opposing fair value gap, okay, and then creates a new fair value gap, that is a change in state of delivery. Change in state means reversal in the movement, market changing direction. That's what it means. So it can be either breaking a low or disrespecting a fair value. So now look at what price did. Price went up after sweeping section highs into our key level. It came down to our first draw, came down to our second draw, came down to our third draw. Now at this point, guys, you need to be very careful. The next draw is this, but we are not sure whether price will get here. You know why I say so? This is a rejection. This is where I used to tell people trading Malaysian SNR that you don't need to conclude that daily reject daily, you jump to the 4 hours. No, don't do that. You are trading blindly. Okay, this is where you will see that the closing price will help us, because we have a lower low, lower close, indicating that price will go to the downside. Okay, and then we have a CCS, that is candle continuation setup. Candle continuation setup, that's CCS, when price closes below. Okay, now remember one thing, we have our market maker sell side of the curve. Market have sold for 5 days and it has hit a strong key level. Guys, are you still sure it will go down? I am looking at price complementing this sell side by creating a buy side of the curve. The sell side of the curve has been formed. Market maker buy and sell model. Remember all the principle I told you. Remember, market maker says buy and sell is also involved. So this is where I will not conclude that because we have a lower close or a CCS setup that market must go down. So what I will do, please guys, this will be your best daily bias video ever. After this, you will not look for daily bias. Your daily bias confusion will be settled here. Remember guys, I told you I'm not going to hold anything back. All I need from you, this is just a baby channel. I just want to build this channel to help people who are struggling, people who don't have money to pay for mentorship. This channel is for you. Share it to others and help them as well. These are premium contents that I'm giving you for free. Now watch. All you need to do, you mark your low. You mark your closing price. As soon as price close for the day, mark it. If this market will continue to the downside and take this draw and take this draw, it will first rally up into a reactive fair value gap, a reactive continuation fair value gap here, because sellers dominated. So therefore, after closing below this, they will leave a reactive fair value gap. But if price rally below our closing price, okay, and maybe takes Asian low and London low, during New York, I will buy into this reactive fair value gap. That will be my draw. Okay. And my next draw will be the high of the previous day. Remember, we are working with previous day high, previous day low. So do not conclude. Whenever you see this, don't conclude, oh, my bias is down. That's wrong. That is where many people are making mistakes. That's why you keep your setup keep failing. Oh, because candle close below the previous day, my bias is down. No, don't do that. After marking your closing price, go to the 15 minutes time frame and watch where price go first. This market will buy. It will go and take Asia or London low. Okay. Then hit a key level and then move up. If it will go down, it will go up rally, takes Asia or London high into a fair value gap and go down. So let's see where our bias will go. Okay. Don't conclude yet. You know what to do. Let's see. Guys, you see, very, very clear, very, very clear. Market went below our closing price and caused a havoc. We want to see market cause a havoc. No raid, no trade. During London, market must take Asian low. Take Asian low, okay, or both Asian and London low, okay, and then rest into a key level. Now you can see this is a key level. This is a key level. Malaysian SNR. See, ICT alone is not enough. After doing that, it rests into a key level before pushing up to our wall, passes our fair value gap, and then hits our previous day high, which was our second draw. Okay. Now, this is Euro USD. If you're trading GBP USD, you now check the low of previous day low and the current low, daily low. You check GBP USD. If this man took out the previous day low on GBP USD, that means there is an SMT divergence. I didn't add it, but watch my video on SMT. I didn't add it. I also do a video on SMT again based on the 4 hours or daily time frame. So that will give you an SMT divergence to tell you that market will move further. But however, based on our higher close principle, our bias is to the upside. Our daily bias is to the upside because we have a higher high, higher close. So now the dynamic principle of change in state of delivery, when price closes above a high, it leaves a fair value gap in a reactive continuation fair value gap, giving you an intention to go up. Okay, but however, we will not conclude that market will go up or market will go down. The only tricks that we will use is to mark our closing price. Remember, guys, don't forget this. Mark our closing price and then go to the 15 minutes time frame. You already know you have your bias in mind, but don't conclude yet. If market will go up, it will go up into our key level, either this high or the fair value gap inside, which will align possibly with this high. Then you will now, and then it must take liquidity, Asian low or Asian high, Asian low and London high, and then buy up to your closing price or the draw. Okay, so we will not conclude. We have to wait first. So let's see where price will go. You see, so price went up. If you look at the opening price and the closing price, price came down with a short wick. On the 5 minutes time frame, you will get entry here. Price came down with a short wick, okay, indicating that market will go up. What did you see? Price gave us a higher high, higher close. The high of the current candle is higher than the previous one. The close is higher, so therefore our bias is bullish. So market will go up, but it doesn't end there, and this will be our draw. We have to do what? Mark our closing price. When I will do an example, we'll do an example, move from the daily down to the entry time frame. You will understand this better. So don't miss the next video. The next video will be on example from daily down to entry, so that you will understand this 15 minutes I'm telling you to go. Now I will mark my closing price, and I will now see where price will go first. If price goes down, because this looks like a rejection, and this rejection is coming from where? It's coming from this. Okay, this Malaysian SNR has been used. Okay, this has been used. This has been used. This has not been used, but it has now rejected it. This has been used. Okay, all right. So it looks like a rejection. So we will not conclude. We have to follow our closing price logic. So let's see. Our bias is still up, but we will go to the lower time frame to get it. So let's see where it goes. You see what I'm saying? You see what I'm saying? Now, you don't end up telling or going and saying that, okay, since there's a higher high, higher close, that my bias must go up. Look at what I said. Closing price. Once you go to the closing price, okay, once you go to your closing price, on the 15 minutes time frame, you will see price rally up first. Take Asian high or Asian low. Remember the change in state of delivery here, the dynamic principle of change in state says the bullish candle that goes up, okay, will form a fair value gap, and the bearish candle that is coming down will disrespect that's caused an inversion fair value gap, and then leave a reactive fair value gap here, a reactive fair value gap, and price will go up first and hit that fair value gap. So on the 15 minutes, the secret will be exposed to you. We were looking at the fact that our bias will be up because everything, look at price close above. So closing price theory or logic is the best thing that will stop the confusion of daily bias. This will be your last video to watch daily bias, guys. So now look, after exposing it, market went down. Okay, it went down to this fair value gap. There's a fair value gap here, and then into this Malaysian SNR gap. Okay, it missed that. It missed this Malaysian SNR gap, and then this other Malaysian SNR gap. Okay, now there is a Malaysian SNR gap here, okay, with a fair value gap. Please, these are things you need to note. With a fair value gap. Okay, now a lot of people will be confused here because watch, price did not close below the consequence encroachment or the mean threshold of the fair value gap. It didn't close, so it showed rejection at these strong levels. Okay, now a lot of people will say maybe this price will bounce up, okay, or it will bounce down. So what we'll do, we'll mark our draw, okay, and then mark our closing price. Remember, when price dominates like this and close below a low, it leaves a fair value gap here, a reactive continuation fair value gap inside here. So if this market will continue to the downside, we will go to the 15 minutes time frame and watch price go up first into that reactive fair value gap. Remember, there is an SNR key level here. There's an SNR key level here. This open and close support. Price close below it, it will turn resistance. So let's see what will happen if price will respect it and then continue to the downside, or price will open here, go down and then go up. So your closing price on the 15 minutes time frame will let you know where market is going. If price goes up first, we are selling. Our bias will be down. So you don't just conclude because you have a lower low, lower close here, or candle close below this, so therefore our bias is down. If you watch many videos, that's what they do. Since previous day, close below previous day. Since current day, close below previous day, therefore bias is down. No, don't do that. Follow your closing price. So let's see whether we will go up or go down. Exactly. This is what I am talking about. Okay? Price opened and went up into that fair value gap that I'm telling you. Okay? It did not touch our Malaysian SNR here. Okay? It didn't touch our Malaysian SNR. Okay? But now, there is also another Malaysian SNR here. You can see. There's a Malaysian SNR here. Once this man closes above it, it becomes fresh. And this man close below it, it becomes fresh. So now price on the 15 minutes, you see price rally up, takes liquidity either Asian high or London high, and then cause a change in state of delivery, which will now give you entry to sell. Okay, and you sell, you look at this target, the draw here, target. Okay, you can take 1 to 2, 1 to 3, or you take this as a target. Malaysia SNR is important. Now what happened, guys? Price closed bearish and has closed below our fair value gap. Take note, price has closed below our fair value gap. That means disrespect to this bias reactive continuation fair value gap. This was an intention for this bias for price to go up, but they disrespected it. So our bias based on seeing this disrespect is down, but we will not conclude. We will mark our closing price and mark our draw. So we will go to the 15 minutes time frame. I'm telling you how you know your direction. And then watch the 15 minutes, wait for price to rally above your closing price. Then you sell. This will be your draw. Okay, this may be another draw. This Malaysian SNR may be another draw. So let's see. Or price will come down and then go up. So it is from the 15 minutes closing price logic that will expose where price is actually going. Let's see. You see what I was saying? This is nice, guys. See. What did you see? What did you see? This was a strong zone that you cannot ignore. And there is a miss here. If you did a Malaysian SNR, you know what a miss is. It's like an inducement. Okay? There's a miss here. Okay? Now, watch what price did. This is our closing price. Price came down first into this key level after maybe taking Asian low and previous day low. Previous day low. Came down, okay, sweeping that low and also take the other day low. Okay, so from 15 minutes and the closing price logic, you already know what to do. Price came down first, so we have to buy. You buy, and where will be your draw? Your draw will be previous day high. That's your target. Or this Malaysian SNR. Remember this Malaysian SNR? Yeah, be your target. Or that fair value gap I told you about. That is here. Price go down. Okay, so now price has gone up giving us a rejection, and then giving us a higher high, higher close, okay, or an engulfing. So everybody will say, okay, since this market is coming from this zone, market will go up. You don't do that. Do not do that. Do not conclude market will go up or market will go down. Don't conclude yet. Mark your high, previous day high, mark your previous day low. Remember the closing price. Mark your closing price. This is what will make you, this is where you will know where market will actually go on the 15 minutes. So after marking this, you go to the 15 minutes and focus on your closing price. See where price go first. If price goes up first, then we are going down. If price goes down first, then we are going up. This is the logic. So let's see. What did you see? Price went down first because there was an engulfing here. When price conquers a zone, there is a fair value gap here. There is a fair value gap here. The dynamic principle of change in state, there is a fair value gap here. Okay, and now we also have a higher high, higher close, indicating that market will go up. But our closing price will tell us what to do. We'll go to the 15 minutes, and then price will take either Asian low or both Asian and London low, rest into that fair value gap. Then we already know our direction. So when price open low first, we know that we are going up. Where are we going up? Where will be our draw? This is our first draw. And then this Malaysian SNR, will be our second draw. Then, which other this one will be our third draw. This one will be our fourth draw. So as you can see, guys, it's very obvious. We have a lot of highs here. We have a lot of highs here. We have a lot of highs here. We also have a fair value gap here. But that should not make you conclude that, okay, since we have all this in line up, market must go up. No, we don't do that. Okay, we don't do that. Remember, there is a strong zone here. Don't forget, there is a zone here. There is a strong Malaysian SNR here. These are the things you do that will guide you in your daily bias, to know your daily bias. So what do? We have a higher high, higher close, indicating that this is a CCS setup, candle continuation setup. This is the mistake that most traders make. They will conclude that since this is closing above this, so therefore market is going up. So they will now, all their mind, as they go to the lower time frame, they are looking for ways to buy. They are looking for opportunity to buy. They will not wait and apply this simple logic. Mark your previous day high. Mark your previous day low. And mark your closing price. This is the foundation. This is the main thing that will make you know whether price will go up or down. So on the 15 minutes, this will expose everything to you. If price rally down first, to take Asia, remember the principle, dynamic principle of change in states shows that when price breaks above a high, it creates a reactive continuation fair value gap. So there is a fair value gap here, maybe possibly coinciding with this high, but we don't know and will not conclude. Remember, there is a strong zone here. Market may come, test it, and then go up. This is how your chart needs to look like on the daily. So now, but our closing price on the 15 minutes will tell us what to do. Either price will go up or price will go down. Don't be surprised. Price may go down. Or price may go up, sweep some of the high here and come down. Or price may come down, hit this fair value gap and go up. So, but we don't know. It is the closing price that is the trick and the secret here. So let's see. Can you imagine? You see what happened? Market went up. Look at what happened. Market went up and respected this Malaysian SNR level. Look at our closing price. Price came down. Look at this short wick. Price came down and hit the Malaysian SNR level. Okay, so this closing price already told us that, okay, market will go up. So once price go below your closing price, you already know your direction. All right, look at what price did. Price cleared all these highs that were lining up, all this liquidity that were lining up, okay, into this fair value gap. But we don't need to conclude yet on where market will go. All we need to do, because this may look like a rejection, and remember there's a Malaysian SNR here. Price may be that it is rejecting from there, okay, or we don't know, it may go up. So what you need to do, mark your high and mark your closing price and go to the 15 minutes. You already have a higher high, higher close, telling you that market will go up. So the bias is up, okay, higher high, higher close is a CCS continuation principle, okay. So but however, the closing price will tell us market may just go up, sweep this high, and then sell down, okay, into this fair value gap, what is it called, mean threshold, okay, but we don't know. So our closing price will tell us everything. Let's see where price goes. Now you see, look at it, market came down first. Market came down first. Take note, market came down first, okay, maybe London taking Asia and then giving you a change in state of delivery. You take your buy, okay, and target previous day high. Now take note, this market is giving us a higher high, higher close. That is to tell you that it will go up. Higher high, the high of the current candle is higher than the high of the previous candle. The close is higher than the close. So therefore, market will go up. It is a continuation principle. There's nothing you can do about it. But however, we will not conclude that it must go up. Okay? What we do, we mark our draw, we mark our closing price. But however, we have used our logic, we have used our continuation principle, our higher high, higher close, to know that this is what will happen. But however, again, remember I told you, after market has bought for some time, this now becomes the buy side of the curve. So we are expecting a complementary sell side of the curve, okay, under market maker buy and sell model. But we will not conclude. Market has bought for 4 days. It can even buy as much as 5 days. But it is this logic that will expose everything on the 15 minutes. So let's see. You see, very clear. Price came down. Remember, I told you that when you have a higher high, higher close, it means price will go up. So when price comes below your closing price first, it's telling you that we are going up. So your draw is this. Look at your draw. That's your draw. So this price that comes down may take Asian low or London low. And during New York, with change in state, it will go up. Remember, there is a fair value gap here, okay, that this buyers kept as an intention or a reactive move measure since price hit above this to continue up. So now what do we have? We have a higher high, higher close again, telling us that market will go up, but we cannot yet conclude. We'll mark our closing price. So based on that continuation principle, we'll know that higher high, higher close, market will go up. But look at the buys. We have 5 days straight buys. So you have to watch your closing price to know whether it's time for this market maker sell side of the curve to start happening. Meanwhile, we have a fair value gap here. So these are the things that will make you know. So now we also have a Malaysian SNR here. So you see why marking your closing price is very important, because closing price is already giving you Malaysian SNR. This is how your daily chart will look like. You see, all your closing price will give you Malaysian SNR key levels, okay, without you going back to mark them again. Look at the closing price are always there. So now our closing price logic will tell us whether it will continue up or it will continue down. I don't need to repeat this logic again, and where it will expose it is in 15 minutes, okay. All right, but however, we have a higher high, higher close. So price may go up, but we will not conclude. Closing price will expose the secret where it will go. But however, we also know that this is buy side of the curve. So we'll be expecting at least sell side of the curve, but we'll not conclude. We'll use our closing price logic. So let's see where price goes. Exactly. Now watch. Based on our closing price rallied down first. Price rallied down first and took out the previous day low. Remember, when price rallied down first, that means during New York, market came down, took out both Asian low and London low and previous day low. So the closing price theory has already exposed that to you. So market came down first. You have to wait for liquidity to be swept. So maybe Asia and London will be consolidating. No liquidity yet, so don't look for buys. When New York comes and sweep both London and New York and London and Asia and previous day low, it will keep a change in state of delivery, which you will enter, and a reactive fair value gap, which you will enter. Remember, a change in state of delivery leaves a reactive continuation fair value gap to the upside, and you buy, and this will be your draw. Now we have what? A higher high, higher close, telling us that market will continue higher, but will not conclude. We'll mark our draw and mark your what? Mark your what? Remember, this man that came down did not hit our Malaysian SNR. So this Malaysian SNR that has a miss, it's like an inducement, is a high probability that if market is selling, I will target there. That will be my target. Okay, apart from this being my first target, because this is a Malaysian support, and because of this miss, this is a high probability target. But first you target here. So you mark your closing price. Don't conclude that because we have a higher high, higher close, market will go up. No, we will not conclude. Okay, we will not conclude. So we have to wait to see what price does. So let's see what price does. Let's see what price does, guys. Okay, a higher high, higher close worked, and price did what? Deep down below the closing price. Look at it. Price came down below the closing price before moving up. So once you see this, maybe on 5 minutes or 15 minutes, market took Asian low, you take your buy. Now watch. We have our fair value gap disrespected, but that doesn't make that it will continue. We also have Malaysian SNR here. We have, guys, these are the things you need to do. We have Malaysia SNR here. We also have Malaysia SNR here. Guys, ICT is not enough. That's the truth. ICT is not enough. You need to complement it with Malaysia SNR. So these are strong zones that may cause reversal. However, it's not our business. We have a higher high, higher close. So it's telling us market will continue. But then remember, market maker buy and sell model. This is a buy side of the curve. So we'll be expecting a sell side of the curve at this strong zone. But that's not our business. We'll mark our closing price. Mark our closing price to know whether it will go up or it will go down. So let's see where price goes. Okay, you can see. Look at what price did. When price opened, it came down below our closing price before going up and then closed. Okay, and then closed. This is telling us, it's showing exhaustion, but that's not our business. There was a fair value gap created here. After price breaks this high, it leaves a fair value gap, and price will come and take liquidity either Asia or London into that fair value gap. I won't be repeating this again. You should understand by now. So all what we need to do is mark our closing price. We are looking for buyers again. mark our closing price, and mark our draw, and mark our low, because this is a doji. We don't know where price will go. So we have been buying for over 7 days now. So there is a market maker buy side of the curve. So expect a sell side of the curve. That is why that market maker buy and sell model was added to the components. Now watch. If market opens and rally above here and sweep this liquidity, okay, I will look for a sell. Remember, there are strong Malaysian SNR zones here. If it rallies down first, okay, and maybe takes this low, I will buy. But the closing price is what will tell us whether to buy or not. So let's see. Exactly. So when you study your closing price, you find that the market went up, swept this high, okay, and hit that Malaysian SNR zone. This Malaysian SNR zone. You see? And gave us a candle 2 closure. If you watch my Malaysian SNR video, you will see, you understand this candle 2 closure. Okay? So daily reject daily does not mean you jump. You watch that video so that you know what to do. Now, we are not looking at that. We are not looking at Malaysia SNR deeply today. So now we have swept this, giving us a what? A lower low, lower close, and as well an engulfing, a bearish engulfing, telling us that price is going down. And then this could be the start of the sell side of the curve, but we cannot conclude yet. We need to mark our closing price and then go to the 15 minutes to see where price goes first. And price must cause havoc. What is that havoc? Sweep liquidity into a key level. Then we'll not sell. This will be our draw. Remember, we have our Malaysia SNR here, key level. We have the key level. That's why you need to mark all these things down. This is how your daily chart will look like. Okay? I'm giving you premium content for free. Promote this channel. Share this thing to people so that they can make money. It's not about when you go, you must pay for mentorship before you can make money on trading. No, I'm trying to help people. Okay. All right. So this is our closing price. We'll look where price goes. So by all indication, we are looking at price will go down, but we don't conclude. It may go up, but the closing price is our logic. You see? So based on our closing price came up first to sweep liquidity. Now remember, when price goes up to sweep liquidity on the lower time frame, 15 minutes, you will see that as they conquered all these highs, okay, there will be a fair value gap in those buyers that went up. Then expect sellers. These are market push up and market push down. Those sellers that push down and disrespect the bullish fair value gap that these buyers were carrying here, they will leave their own fair value gap. The sellers will leave their own fair value gap. As soon as they disrespect this, they will leave their fair value gap. Price will go and tap into it on the 15 minutes. And that will be an intention or a reactive continuation fair value gap to the downside. And then when you get your entry, remember it will clear both Asia and London high. Then during New York, you take this trade. Okay, your draw was this, okay, and this was the next draw. Price did not clear it. Okay, so this is our next draw. So after seeing this now, where is our bias? Where is our bias? Remember, there is a fair value gap here. You need to watch all these things, guys. There's a fair value gap there. Where is your bias? By looking at it, our bias is to the downside, is it not? So we'll mark our draw. Okay? Mark our draw and mark your closing price. But you don't conclude that yes, your bias is in the downside. No. You use the closing price logic. If price goes up first, we are selling. If price goes down first, we are buying. So let's go. Let's see where price goes. You see? So price, what the price did? Price came down, swept this low, previous day low, swept Asia and London low, and then came into this fair value gap, okay, and respected it. Is there any other zone? The Malaysian SNR here was a miss, okay. Now price rejected this fair value gap, showing a respect to it, showing a respect. So based on our closing price, we would have bought from here because we marked this key level. We would have bought and then take our target at this key level. There's a key level here. There's a Malaysian gap here. There's also a Malaysian gap here. You see, when you mark your closing price, it will help you. Now, what are we seeing? There's a strong rejection. Market did not close below previous day low. So now, what some people do, most traders do, they say, okay, since market did not close below this low, our bias is bullish. Yes, our bias is bullish, but we don't conclude yet. We'll not conclude. We'll mark the closing price. It is what happened around the closing price that will tell us where our direction is going. Okay, so guys, you know. So let's see. Our bias may go up or down, but our closing price is our secret. Let's go. You see, here's what I'm telling you. That by all indication that because this man did not close below, this is what many traders do. Because this market did not close below this, the market will go up. Look at what market did. What did our closing price tell us? It told us that our closing price told us that market went up first and take out previous day high. Look at market went up first. Look at market went up first and take out previous day high. So when you see this, after market take out previous day high, maybe during London or during New York, okay, what do? You take your sell from there and target this previous day low. And target the previous day low. Now, what have we formed? Previous day low. Look at market will sell from here. Target previous day low into this key level. Look at this key level. This Malaysian SNR key level. There's another Malaysian SNR key level here. Closing price. Okay. Malaysia SNR key level here. Malaysia, our fair value gap here. Now, anytime that you see a Malaysian SNR level and a miss, an inducement, that level becomes very important. But now let's focus on our point. Now we have a lower low, lower close, okay, telling us that price has formed an engulfing, bearish engulfing. So the market is going down, right? The market is going down. But this looks like a rejection too from the Malaysian SNR. This is what many Malaysian SNR mistake they make. Because there's a rejection, they will not say, oh, daily reject daily, they jump to for no, you don't do that. So what we'll do, we'll mark previous day low, then we'll mark the closing price. If price rally up, we'll sell. If price comes down, we'll buy. Remember, all this void must be filled because that's the buy side of the curve. So we are looking at sell side of the curve. So this is the man that will show us what to do. Let's play. Good. 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 This is what I'm talking about. This is what I'm talking about. You see what happened? Our closing price now, market came. Remember, this man dominated this, so there must be a fair value gap. And then there is a Malaysia SNR here. There's another Malaysia SNR level here. Good. This Malaysia SNR level. This man here. Okay, when this man displaces down, it becomes fresh. So look at this. So after price may have taken liquidity from Asia and London, it hits that Malaysia key level. And then you will now take your sell from there. Target the previous day low because that will be your draw. Okay, previous day low, that will be your draw. So now look at how the closing price exposed what market will do. to us. So what do? We have a lower low, lower close, and price close below, giving us a CCS candle continuation setup. Okay, so what we do, we mark our closing price. Mark our closing price and see whether price. This video is becoming too long, guys. So I will soon stop it. Mark our closing. I believe you understand this thing now. Okay, so if price rally above it and then goes down, that will be a sell. If price rally below it, that will be a buy. So let's see. Remember, when price disrespects a low or close below a low, it leaves a fair value gap. So where it rallies, that's where it will go. So let's see. You see? Exactly. Market did what? Rally above our closing price into that fair value gap I'm telling you, and then sold down. And our draw would have been either this level or this level. Okay, or you take 1 to 2 or 1 to 3. This low is still there. This other Malaysian SNR level is there. This fair value gap you see here. So we have our lower low, lower close, continuation to the downside, but we don't conclude. You understand? You know what to do. You mark this, your draw. You mark the closing price, and then see where price goes. The closing price will show you your direction. Good. You see that we have a lower low, lower close. With all these lows, did not qualify market to sell, and with this fair value gap. So, but the closing price did one. Price came down first before going up. So this becomes our draw. So when you go to the 15 minutes, it will be exposed. You will not struggle again about daily bias. Please study this video very well. Go through your chart, backtest it, understand this thing, apply this principle, combine these precepts that I've taught you. The same thing here, you mark your closing price, okay, and you see where price will go. You see, look at what price did. Remember, there are Malaysia SNR levels here. There are levels here. There's a level here, okay, and our closing price was here. So price came, rally above it into this Malaysia key level, and then sold down. Remember, because of this engulfing, there will be a fair value gap here. Okay, you target it. Now after price did this, you mark your closing price. Your closing price will tell you what to do next, and then you mark your draw. Either price will go up or down, depends. So the closing price will tell you. Look at how this closing price exposed these guys here, and the market came down. So let's see. Again, closing price gave us market rally up first, so we'll sell to this draw. You see, just like that, and then price hits this Malaysia SNR level. There's a draw here. There is also a draw here. There's also a draw here. So you repeat the same thing. You do the same thing. Mark your closing price, and those closing price, you use them later in the future. Okay, you use them. Those closing price, you use them because they are key levels. So you look at where price goes again. You see, market now came down. That our inducement, they have taken it now into that major key level. You see, price has taken it, swept this, remaining this. So look at your closing price. Look at what price did. Price rally up into the other closing price that we did. Look at into that Malaysia, this closing price, which now become Malaysia SNR here. Look at what price did after taking liquidity. Where will be your draw? Previous day low. Okay, even these two. So there are draws here. Guys, I will stop here so that this video will not be too long. So you understand what is happening. This is the closing price logic. This is how you frame your daily bias using the closing price logic. Follow what I have told you, or what I have shown you, or have taught you today. It will guide you It will add more structure to your trading. It will organize you. It will make you know direction will never be your problem anymore. You'll be more focused. You know where your trading is heading to. So you know where to, you know your setups. Okay. So I don't want intend prolonging this video. If we continue going up, continue like that, you'll find out that the closing price logic will lead you and guide you. So guys, the biggest mistakes most traders make is guessing direction. Don't do that. Don't conclude that because this is a lower close, market must sell, or because this is a higher close, market must buy. Don't conclude. You use the logic. The market often leaves clues through closing price. It leaves clues through closing price. Okay? You just need to know how to read it. You just need to know how to read it. Okay? Guys, if I may ask, how do you currently frame your daily bias? Is it market structure, or you use instinct, or something else? I would like to know. Okay? Drop it in the comment section. Okay? If this video makes sense to you guys, if this video makes sense to you, kindly subscribe to FXPilot, okay, and turn on notification, because here we focus on trading smarter and not harder. In the next video, I will do a walkthrough example, okay, from daily bias down to entry, so you understand exactly what to look for before taking trades. Okay, thank you very much. See you in the next video. Bye.